Now,
My name's
sir.
John Denny. I'm a retired
just
postal
me
worker.
too.
Wait.
I retired in 2001,
Canvas ready?
but I've been active in the fight to save our postal service from privatization since then. I was a mail handler. We were the ones that do the dirty work in the post office, the heavy work and the dirty work. You'll see the clerks on the window, you'll see the carriers delivering mail. You never see us. We're in the back loading the trucks. Okay. I was asked to speak about postal banking. I want to try to put a little bit of it in a context rather than just speak about postal banking. I'm going to try to put it in a whole move to privatize the post office. Does government have a role in providing essential services for the public, or should maximum profits be extracted by the private sector? Regarding the Postal Service, this debate did not start in 2008 when the current recession, coupled with the onerous requirement Congress imposed on the Postal Service to pre-fund retiree health benefits, began to cause the huge deficits being trumpeted by the privateers and their mouthpieces in the media. The back and forth between a postal service operating for the public good and advocates of profit-driven entrepreneurs charging what the traffic will bear goes back to at least the early 19th century, with the fights over the private carriage statutes, which gave the post office a monopoly over the delivery of letter mail, to the debates waged over parcel post and postal banking in the early 20th century, and to the conclusions of the Johnson administration's Capell Commission, which found that the America's Postal Service should be placed on a business-like basis, to Ronald Reagan's Grace Commission, which advocated for a fully privatized postal system in 1984. Prior to July 26, 1775, the 13 colonies relied on the Crown Post Office for carriage of their letters, for obvious reasons. The Second Continental Congress in 1775 saw the need for an alternative and commissioned Ben Franklin as its first Continental Postmaster General. The present postal system was established by an act of Congress in 1792 with specific reference to Article 1, Section 8, Clause 7 of the United States Constitution, where the power to establish post roads and post offices was one of the enumerated powers granted to Congress. If you look at the way they have them listed, it's before the power to raise an army or a navy even. And from the beginning, the post office had a monopoly on the delivery of letter mail. There were many challenges to the private express statutes by private carriers, particularly by Wells Fargo, which operated a private postal system in the western states for many years in flagrant violation of the law that gave them a letter monopoly to the Postal Service. Private express companies like Wells Fargo continued with package delivery, charging whatever the traffic would bear, especially in rural areas. To provide our citizens with an affordable package delivery service, the Postal Service initiated Parcel Post in 1913, and tension has existed ever since between the Postal Service and the private carriers. Today, UPS and FedEx spend big bucks lobbying Congress to constrict the Postal Service ability to compete for a share of the parcel and express mail business. And Fred Smith, chairman of FedEx, sits on the board of ALEC. In 1971, with the passage of the Postal Reorganization Act, the Postal Service became a government-owned corporation. The Nixon administration used the findings of the Capell Commission as a template for the reorganization. Frederick Capell, a retired CEO of AT&T, testified before Congress that while he thought outright privatization was the best course for the Postal Service, his commission was not ready to recommend it at that time, which was 1968. But in 1984, Reagan's Grace Commission did recommend outright privatization, and it's been occurring on a piecemeal basis ever since. Large private mailing houses get huge discounts for pre-sorting mail. A little background, your mail has not been sorted by human beings for many years. You deposit a letter in a mailbox, it gets picked up and trucked to a processing facility. The mail is dumped onto a conveyor belt, it's fed through a machine which faces and cancels the stamps. It then goes through an optical character reader, which sprays a barcode. It can read the address and spray a barcode at the bottom of the letter. And the technology has been refined over the years to where these optical character readers can read all but the most illegible handwriting and translate it into a barcode. It's then fed through a barcode sorter, which reads the barcode and sorts the mail into sequence for the carrier to deliver. In exchange for providing mail with barcodes already affixed and bypassing the front end of the operation, the Postal Service offers discounts to the big corporate mailers. Problem: these discounts are so huge, they bring the revenue the Postal Service receives for the pre-sort mail down below what it actually costs to process it. Your 49 cents that you put on a letter is subsidizing these big mailing companies that pay 1 or 2 cents for the same letter because they've bypassed the Postal Service the first couple of steps of the operation. These pre-sort houses, Pitney Bowes is the largest, are for the most part schlock operations with low-paid workers with no benefits, in contrast to the unionized postal workers. Transportation has also undergone more and more privatization since the 80s, with postal drivers being replaced by non-union freight haulers like J.B. Hunt. In January 2013, a white paper by Pitney Bowes came out calling for full privatization of all postal operations except last-mile delivery. As we speak, we're witnessing the implementation of the privatization called for in that white paper, with the pilot program now underway at 84 Staples stores to provide full postal services. A pure and simple union-busting move to replace postal clerks with low-paid Staples associates. And the Postal Service continues to close and consolidate its network of processing facilities, causing our customer base to seek alternate methods of delivery. Just this week, the press has been reporting on mail delivery being curtailed in the Washington, D.C. area. Carriers have been ordered by their supervisors to return by 5:30 or 6 p.m. and bring back the undelivered portion of their routes. Now, no carrier should be on the street after dark. It's inherently dangerous. Indeed, just last November, a young letter carrier, Tyson Barnett, was murdered on his route in Cheverly, Maryland. And robberies of carriers on the street late at night have become epidemic in Chicago and other places. But the answer is not to curtail the mail, but to reopen the processing plants, undo the ill-advised consolidations, and hire enough clerks, mail handlers, motor vehicle personnel, and letter carriers to sort, move, and deliver on a timely basis. Running counter to this prevailing trend towards privatization is the recent call by Senator Elizabeth Warren to the Postal Service to re-enter the banking business. As you know much better than me, because you people follow this stuff, Senator Warren has called for expansion of the Postal Service's financial products. We already provide money orders, and we have a pilot program with limited use credit cards. Senator Warren and others, notably Elijah Cummings in the House and Bernie Sanders in the Senate, have indicated their support. The Postal Service's own Inspector General has suggested that the Post Office could complement banks' offerings. Since I see that the Inspector General report is linked on your Alt Banking website, I won't take up your time with a detailed summary of that. I just might mention that since we already offer money orders and international money transfers, what is being considered as an expansion of our financial services. In fact, the Postal Service did operate a postal savings operation from 1911 to 1967. If you ever have a chance, you're on East 70th Street, you walk into the Lenox Hill Post Office, they have the old brass plates over the clerk windows. You'll see on the west side of the building, you'll see the Postal Savings Bank brass plates. They're partially covered over with tacky Postal Service advertising banners, but they're still there. During the Civil War, postage stamps actually circulated as small change due to a shortage of copper and silver for minting coins. And the Civil War also saw the entry of the Post Office into financial services. We're not talking about entering financial services now because Senator Warren says it. We've been in financial services business selling money orders since 1864, when there was a need for families in the North to be able to send money to their soldiers at the front. Postal Service has been in the financial service business selling money orders since 1864. Well, what are the chances that the vision of Senator Warren and the United States Postal Service Inspector General can come to fruition? The predatory lending industry, payday loans, will no doubt be in opposition. The House Committee on Government Oversight and Reform, which has jurisdiction over the Postal Service, will be a formidable obstacle. The committee's powerful chairman, Darrell Issa, has successfully prevented a bill, or did successfully prevent a bill which would have brought about meaningful postal reform, but making it through the last Congress, even though the bill had 230 co-sponsors. There's democracy for you. A bill with 230 co-sponsors couldn't get through Issa's committee because of his power to block it. On the Senate side, Democrat Tom Carper, chairman of the Committee on Homeland Security and Governmental Affairs, works in tandem with his Republican counterpart, Tom Coburn, to advance the cause of privatizing the post office. Witness the recent bill, S-1486, reported out of their committee with bipartisan support. The only recorded vote against it was Senator Tester, Democrat of Montana. The rest of it were Democrats and Republicans that voted for this execrable bill. The bill passed through their committee would threaten 100,000 full and post-time postal jobs, lead to pension cuts, weaken workers' position in upcoming contract negotiations, and require Postal Service to pre-fund workers' compensation by $17 billion, further strangling our finances. It would permit the USPS to close and consolidate more mail processing facilities, allow the Postal Service to further reduce service and delivery standards, eliminate Saturday delivery after 2017, eliminate door-to-door mail delivery, and expose injured workers, those be workers who have been injured or on comp, to impoverishment once they reach retirement age. Given the union-busting, pro-privateer bent of the relevant committees in both the House and the Senate, it could be a long, hard road with an uncertain outcome to get expansion of postal financial services through the Congress. But the Inspector General's report intimates that congressional approval may not be necessary. The report alludes to the prohibition on offering new non-postal products in the Postal Enhancement and Postal Accountability and Enhancement Act of 2006. But the Inspector General goes on to state, however, given that the Postal Service is already providing money orders, and we have been continuously since 1864, and other types of non-bank financial services, it could explore additional options within its existing authority. Okay, it could explore additional options, but would it even try, given the current leadership, Postmaster General Patrick R. Donohoe? Probably not. Donohoe's policy has been to cut, and cut some more. Just a couple of years ago, we had 461 processing plants strategically located all around the country. 174 of those plants have been closed and consolidated in the last 2 years. Some of the results would be ludicrous if they were not such an example of the degradation of a once proud, vital service. Bronx Mail Crossing was taken out of the building at the corner of 149th and Grand Concourse in November 2011. Instead of Bronx mail being processed right in the Bronx for efficient dispatch to the local postal stations, it has to be taken down to 30th Street, 9th Avenue in Manhattan, and then sent on trucks across the bridges over the Harlem River during the morning rush. This is causing massive delays in mail delivery for Bronx residents. Staten Island mail takes an even more circuitous route. Mail that's picked up in Staten Island is sent to 30th Street and 9th Avenue in Manhattan, over the bridges to be canceled, then run through their optical character readers, then trucked to Brooklyn to go through their sorting machines before it comes back to Staten Island. The cancellation and sorting of mail deposited in the vast mid-Hudson Valley, previously done at Newburgh, where the lease on the building near Stewart Airport cost the Postal Service $1 a year, is trucked to Albany, over 125 miles away. When the load is too much for Albany to handle, they hand it off to Syracuse or Springfield, Mass, before it comes back to Albany and then back to Newburgh for delivery. Does it sound to you like the people responsible for this crazy quilt degradation and delay of the People's Mail Service will assent to such a sensible win-win proposal as that being advanced by the USPS's own Inspector General, Senators Warren and Sanders, Congressman Cumming, and a growing chorus. Bill Moyers had a column yesterday just about this. He devoted a column, it just came out yesterday. The Inspector General's report alludes to the level of trust the public has in the Postal Service, built up over the years as a factor which would induce people to want to use banking services should the Postal Service decide to re-enter that field. But that trust has been eroded and degraded over the last few years of poor mail service caused by the ill-advised cuts and consolidations. And how will the payday loan industry and their backers, the big banks, react to the Postal Service becoming a lender of small loans? Just a few factoids. Payday loan companies depend heavily on financing from big banks, including Wells Fargo, Bank of America, and J.P. Morgan. The big banks provide $1.5 billion in credit to the publicly held payday loan companies, and it's estimated at $3 billion or more to the industry as a whole. Wells Fargo finances more payday lenders than any other big bank. 6 of the 8 largest payday lenders. Bank of America, J.P. Morgan Chase, and U.S. Bank also finance the operations of major payday lenders. Bank of America and Wells Fargo provided critical early financing to the largest payday lender, Advance America, fueling the growth of the industry. And the big banks profit by extending credit to these payday lenders. Many payday companies have strong ties to Wall Street. 2 Bear Stearns executive guided the rise of payday lender Dollar Financial, and 2 Goldman Sachs executives sat on the company's board when it went public. Advance America's executives and board members have ties to Bank of America, Morgan Stanley, and Credit Suisse. Bank of America and its subsidiaries own significant stakes in 4 of the 5 top payday lenders: Advance America, Easy Corp, Cash America, and Dollar Financial. Payday financiers are major bailout recipients and continued to extend credit to payday lenders throughout the financial crisis and following the bailouts. 2 payday lenders, Easy Corp and Cash America, used loans negotiated with J.P. Morgan and Wells Fargo shortly after the buyouts to buy pawn shop chains in Las Vegas and Mexico. Big bank financing of payday lending led to the rise of a powerful industry lobby, which has successfully fought efforts to cap interest rates. Several payday lenders began dominating the industry in the late 90s on the strength of bank financing. These lenders formed a powerful lobbying group, the Community Financial Services Association, which has spent millions on federal lobbying efforts. Major payday lobbyists also lobby for financial institutions such as Morgan Stanley, Fitch Ratings, Visa, the Blackstone Group, the Managed Funds Association, and the Private Equity Council. A national interest rate cap of 36% would eventually put payday lenders out of business, according to Advance America's own disclosure filings. But such a cap failed to gain traction during the financial reform process due to the clout of the financial industry's lobby. That if the effective rate that's proposed in that Inspector General report, if the Postal Service were to get into small dollar loans, is 28%. Even if the Inspector General is correct that the Postal Service has the authority under existing law to expand its financial products, you can be sure that these powerful lobbies will have their stooges on Capitol Hill drafting legislation to block it as fast as you can say, "Bad credit, no problem, sign up now." And the likes of Darrell Issa will make sure it's fast-tracked through his committee. So what can we do? Give up? Throw our hands up in the air? I don't think this group operates that way. And we postal activists are counting on the support of knowledgeable, tough, seasoned fighters and activists like the people I see in front of me in this room to help us. We need you to work with us, advise us, and stand with us. The Postal Service doesn't need postal banking to survive. Even with the drop in first-class mail due to the inroads of the internet, which, by the way, has been leveling off, we are a thriving enterprise if the unfair retirees' health care pre-funding is taken off our backs. In fact, the Postal Service has been a cash cow for the federal treasury for many years. As you all know much better than me, money is fungible. The over $5 billion a year we have been paying into the Treasury for future postal workers' health benefits, workers who haven't even been born yet, doesn't go into a lockbox. It goes into the general fund, so it can be used to buy drones to kill babies in Pakistan, or whatever useful purpose our benevolent government decides. The corporate media would have us believe the Postal Service is a dinosaur, outmoded, a relic of the horse and buggy epoch. But even without the boost in revenue that an expansion of our financial products would give us, we're in the black in operating revenue when the pre-funding albatross is subtracted. The emphasis should be on providing a vital public service to an underserved population, not saving the post office. While the expansion of the post office financial services would develop into a source of revenue to help provide universal service, more importantly, it would help achieve an important public good, the extension of banking services to the millions of people with low incomes, rural people, immigrants who are currently unbanked. Do our sisters and brothers deserve anything less? Questions?
John, would you like to be like a school teacher and just pick, or take stack?
Now, you're talking about the $5.5 billion that's required by the post office now to fund future benefits and future pension and health benefits for the future. How did that get into the legislation?
Okay.
Because I mean, if is put on the post office, then wouldn't that be nice to turn that around to make the banks have to do the same thing?
Darrell Issa claims, I was in his office in December of 2012. The man is a pathological liar. He claims that there's a federal law that all private companies are required to pre-fund their retiree health care benefits at 100% by federal law. It's a bald-faced lie.
Right.
There is no such law. By the way, that pre-funding only applies to retiree health benefits, that $5.5 billion. Our pension funds are another matter. We have two pension systems, Civil Service Retirement System, which ended in 1984, and the Federal Employees Retirement System, which took over. Put those two pension funds together, the Hay Group, that accounting firm, the GAO, our Inspector General, and several other agencies that have studied our pension funding, all have held that because of actuarial errors, the way they calculated how much we have to put aside for that we have overfunded that by as much as $80 billion. Now that money could be refunded to the Postal Service, or even a portion of it, by Obama with an executive order. The healthcare pre-funding is another matter. You need an act of Congress to do that. That act passed in 2006. It had the support of 3 of our unions, believe it or not. There's 4 postal unions. 3 of them supported that legislation